The ongoing financial crisis is forcing many multinationals to cut projects and to also delay their expansion plans. Foreign investment in Shanghai is expected to drop for the first time in a decade. My colleague Dai Qian has more.
So I would like to have your self-introduction on that.
Of course. I worked there for 4 years.
When the economy was booming, this headhunting firm could speak with as many as 15 potential hires a day. Multinational companies needed staff to feed project demands during rapid expansion. But as these companies feel the pinch of the financial crisis, the situation has changed.
Globally, they are cutting off like 20% of their workforce, China as well. My clients, if it's manufacturing-based or export-oriented companies, they will have the same issue. They're holding off their recruitment activities. The other example is that salary increase rates, because year end or year beginning is the merit salary increase time. And normally the salary increase is about 8 to 10% for those multinational companies. And this year, most of the companies, I would say over 50%, 50 to 60% of the companies actually, they are cutting half of their budget.
Less hires and limited raises are only part of multinational companies' efforts to trim costs. In the auto and chemical industries, factories have been closed since late December. Fortune 500 companies like Delphi have asked staff members to take annual leave during slow seasons.
We've received reports from many big multinational companies which hope to postpone their investment plans. Some say they have problems with their cash flow. Medium and small-sized companies are suffering the same. Many have called off their investment projects to hedge risks.
As a result, government researchers predict the city's foreign investment may dip for the first time in a decade this year. And they expect the situation to worsen over the next few months. To prevent the economy from a sharp slowdown, authorities have come up with ideas to help foreign companies.
We're talking with major banks to offer more loans to foreign companies. For those with a good credit record, we will persuade banks to lower their threshold of lending to help alleviate foreign companies' liquidity problems.
In the latest move, government authorities are now considering extending project funding deadlines to help companies struggling to raise capital. Dai Qian, ICS4 CCTV.
Better news overall, though. The Chinese economy maintained stable growth of 9% in 2008. That's despite tough challenges brought on by the global financial crisis. China's National Bureau of Statistics also said Thursday that GDP exceeded 30 trillion yuan. That growth was the slowest, though, since 2001. It was also the first time China's GDP figure was below a double-digit level in 6 years. Meanwhile, the officials say that the country's annual growth rate for the fourth quarter dipped to 6.8% from 9% in the third quarter. But it reports that the overall national economy maintained momentum of fast growth, stable prices, optimized structures and improved welfare. The Statistics Bureau says the unexpected international crisis will not alter its situation. Officials also say China is planning to implement measures to promote growth, to spur domestic demand, restructure its economy and to also improve ordinary livelihoods. Now, those figures for China as a whole are out, and also Beijing has unveiled its economic numbers for 2008. The municipal government says Beijing's gross domestic product topped 1,000 billion yuan last year. That's up by 9% year on year. But that growth was 4.3 percentage points down from that figure in 2007. Local authorities ascribe the slowdown to declining industrial growth, especially as a result of macro control measures and drops in staple commodities. Meanwhile, Beijing's GDP per capita topped $9,000 last year, becoming the second highest in the country after Shanghai. Local officials say the service industry contributed the most to the city's economic growth. Meanwhile, other sectors, including IT, wholesaling, retailing and business services, all recorded two-digit growth rates last year. In the first 11 months of 2008, large-scale industries in the service sector marked a 21% increase in their profit levels. Now, a financial crisis forces us not just to tighten our belts, but also to become a little more creative. Following in the footsteps of cities in Sichuan province, Jiangjiakou in Hebei and Hangzhou and Zhejiang have begun subsidy plans for its local residents. BizChina's Zhou Xiaoye takes us there.
Zhangjiakou City is providing 1 million yuan in subsidies for purchases of vegetables and meat. Nearly 30 vegetable vendors and 20 meat sellers have been appointed to provide the subsidies. Early in the morning, local citizens have been queuing up at these designated areas.
I bought cabbage, celery and green peppers. I really appreciate the government's subsidy.
The price here is much cheaper than other markets. Everyone can afford it. It's great.
In eastern Hangzhou, some retired and low-income residents have received vouchers from the government. Although the vouchers were expected to be available for use starting on January the 24th, some supermarkets have already begun receiving the vouchers.
We've received nearly 200 vouchers since yesterday.
Shopkeepers say vouchers are available for everything in the market, including discount products, and delivery service is also an option for the elderly. Zhou Xiaoye, CCTV.
Just a bit earlier in this program, we talked to you about Sony as its shares plummet in the US and also back home in Japan. Now, the electronics makers forecast operating losses of 260 billion yen for the year to the end of March. That's about $3 billion US. It's a record low for Sony and also its first loss in 14 years after earlier loss predictions on a smaller scale. Now, the electronics giant blames its losses on sliding demand, a stronger yen, and restructuring at its ailing electronics operations. Sony's US share fell by 9.7% on Thursday in pre-market trade. The firm is stepping up a major restructuring program, saying it will more than double its cost-cutting target to over $2.7 billion by 2010. But some analysts say more drastic action is needed to streamline the sprawling Sony empire that includes semiconductors, music, movies, and insurance. We're going to